How about single best chart? Let's do it right now. And we are thrilled to do it with an economist who wrote this up 2, 3, and 4 years ago. Follow wages. This is the inflation-adjusted all-in wages and benefits. To help Mr. Porcelli, this is ECI less the core service sector inflation that we all feel. So it's a manufactured chart to show the massive wage gloom that we've seen. And as Mr. Porcelli says off the 2016 mat, we're doing better. I don't care, Tom. All our viewers and listeners want to get back to is this joy. Is there any hope of sustaining 2003, 2004, 2005?
Yeah, so, and again, just to make sure we're bringing this conversation full circle, right? This is exactly what we were talking about before, right? This is the philosophical part of it. That is a chart quite clearly shows there has been an improvement in wages. Do you get back to those levels? I think it's very difficult. It's not impossible, but it's difficult. The reality is the pieces are in place for it to happen. The labor backdrop is incredibly tight in the United States. And in fact, on our forecast, you can easily make the case that the unemployment rate gets down to close to 3% by the end of the year. So you'll
3.0.
3.0, you'll get close to it, not that you will get to it. And that will continue to put upward pressure on the wage profile. But do you get back to, sort of what you saw in the early 2000s? I think it's extremely difficult, but I think you can get pretty darn close.
Okay. Raghu Rajan, Book of the Summer, 3 pillars. I'm going to read it, the third pillar, rather. I'm going to read it, you're going to read it, and all that. And the primal scream from Raghu is we're aggregating all our data. You've been courageous about this. And the fact is the rich people are really getting a wage pop, and a lot of other people aren't. Is that chart and the numbers we're going to spout today? Mr. Kudlow's going to be on with John Farrow. Come on. It's all aggregated malarkey. The haves are getting it all, right?
It is aggregated. And again, as I said earlier, I think you have to be mindful of this idea that we are looking at this aggregated data in a macro sense. But you could take aggregated data and break it down. And when you break it down, if you look at the lowest paying job industries right now.
What about the middle?
They are, so let me make this point. The lowest paying job industries are actually seeing wage pressures, as are the upper end and everything in between. So again, there are wage pressures. Is it the wage pressure that people want to see? Honestly, I think the answer to that is almost always going to be no. I would argue that back in 2002 and 2003, when we were seeing that people wanted more. The wanting more part of it is, let's have a beer and have a conversation about that. But I'm saying, if you just want to have a conversation about...
We don't have a beer. Francine, we don't have a beer on Friday. We have a Gibson.